We are awaiting President Biden to sign that bipartisan infrastructure deal into law. The ceremony is expected to get underway any minute. So as we await for that, let's talk about what's included in this new package, because one issue the Biden administration has been looking to address is the crisis that we're seeing in the supply chain. So here with a look at what's happening as we head into the holiday season, Greg Hewitt, he's DHL Express's U.S. CEO. And Greg, it's good to see you again. We know that the supply chains have been stretched very thin. Part of it, I guess you can blame, is on the outdated infrastructure system. But first, just give us your thoughts on the infrastructure bill that we are getting from Congress today, what President Biden is expected to sign into law any minute, and whether or not you think it's going to help resolve some of those challenges that we're seeing.
I don't know if it'll resolve anything immediately. I think investment in infrastructure is good for the country and good for all of us long term. But a lot of the challenges that we're facing right now are a product of, we'll say, COVID, the environment around commercial airspace, and then, of course, the challenges in the Suez Canal and outbreaks in ports in China for COVID. I don't think this bill addresses those, and that's what I think got us to where we are today.
Greg, we're hearing a lot of news, for instance, Boeing talking about using 737s as freighter jets and coming out with the 777X as a freighter jet. Is a day coming where aviation will command a much larger portion of international shipping, or is it still going to be within continents? What does the picture look like?
I think we believe we benefited. We're a fixed cargo network, as you know, on the express side, usually smaller weight, lighter product. But of course, with the crisis in air cargo and ocean, we've seen a steep increase in our weight per shipment, and we're building out our facilities on the ground and here in the United States to be able to handle that. And we think a large portion of that product will remain with us because people are a little bit worried about that fear of missing out and not having product close enough. And you can't change production lines and build out infrastructure quickly closer to home. So we do think express and air will play a big part in the supply chain over the next few years.
Greg, how quickly do you see some of these bottlenecks beginning to ease? Or I guess the flip way of asking that is, how long could this problem potentially persist?
Well, we thought we'd be out of it by now, and that didn't happen. And I think some of the challenges on the port side and on the ocean side compounded what was already a capacity crunch in the air that came from commercial space in the air being down for COVID. I don't think you're going to see a speedy recovery early in 2022. We're thinking maybe the back half of next year, there might be some increased capacity, both from hopefully commercial flights coming back. And then, as you mentioned, something Boeing talked about, this idea of maybe offering more commercial freight lining experiences that have been in the market historically. What we need is capacity. And once that capacity comes back, that takes some of the burden off the supply chain.
You've talked about the fact that business to consumer at your end continues to drive your growth, 58% of volume. What does the next couple of quarters look like? Can you sustain that kind of growth?
Yeah, I think it's going to continue to grow. I mean, we're planning. I think one thing we've done well is we've only taken on what we can handle. And so we added about 12% in aviation lift, 18% in terms of infrastructure, capacity capability and facilities in the US, and we're adding about 2,000 employees. All of that's designed to handle about 15% growth, which is what we expect to see for our peak season and as we head into next year. I think the thing you might be hearing is, I think there are a lot of people who'd like us to take more, but you can't add aircraft, facilities, and people at an exponential rate. So we're handling what we can handle. We're managing that well, and we expect that to continue well into next year.
Greg, what about the shipping rates that are being paid right now? They surged since the start of the pandemic. They obviously remain extremely elevated today. But as we do see some easing potentially in the supply chain crisis, are they going to eventually return to 2019 levels, or is it going to be, I guess, just higher prices from here on out?
I'm not the expert in that area because on the express side, we've actually held our pricing. We've been able to blend the extra space and investments we've made into our pricing. So it's gone up, but more in line with inflation. I think what you've seen in the air and ocean side is as the capacity is crunched and the market has changed, you've heard of things like 4 and 5x pricing. I think when capacity comes back, they adapt to the market and the market price will come back down. But it really comes to be, when does that capacity come back and how much?